This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. Today I'm going to give a stock market update. I'm going to go through the market conditions on the S&P, kind of give a rundown of end of the year rundown for all volatility, overbought, oversold, the sentiment, and the market trend, or at least the trend and momentum for the S&P. And then what I want to do is cover a number of other indexes just to kind of finish out the year. So let's go ahead and get going on this. So on the left here, I've got this spreadsheet of what I would consider to be the market conditions that are in place right now. And I've got the monthly trend, weekly trend, and daily trend at the top, and then the momentum for monthly, weekly, daily, and then volatility, overbought, oversold, and sentiment. So the sentiment didn't change. In fact, pretty quiet week, and there was no update on the sentiment this week. So that's just the same as last week. Now, what I'll say is that just based on the action in the market, I wouldn't be surprised if this is closer to the negative mark, meaning the number of bulls and bears are equal, or maybe there's even more bears. So it'll be interesting to see how that plays out next Wednesday when the update comes through. But right now, that's considered neutral. The overbought oversold is actually at 42, not 43, but close enough. That's this RSI 5 on a weekly chart. It's pretty much in the middle here. If we get any more of a drop, we could see the two things that I'm watching for short-term kind of signals is when we get closer to overbought. This was close because it didn't really reach a sentiment reading that I would consider to be a sell signal, and it didn't quite reach overbought. But in this case, that hit both. We hit a sentiment number that was a sell signal, and we got overbought where it got above this 70 level. Same thing holds true on the oversold side. So we want to be on the lookout for when these two are kind of positive together. So that's what we're looking for, either positive or negative, to give somewhat of a signal. Now, the volatility, this is showing that the average true range for the S&P on a daily chart is actually below its moving average. It's 18 MA. So currently the daily chart, which has been oscillating a little bit, it was positive, then it went neutral, and then maybe even negative, and now it's back to positive again. And you can see we don't really have a clear trend yet, but right now it is declining below a declining moving average. So it qualifies as positive on the daily volatility. Now, the weekly is actually below a flat moving average, so that's considered neutral. If this volatility continues to drop, like what we've seen here, then we could see this roll over and have this in a position where it's rolling over, and that would be a bullish sign for the market that increases the odds of some kind of reversal trying to take place. So that's what we're on the lookout for and want to keep an eye on. Let's go ahead and move into the trend and momentum for, we'll start with the spider, and I'm going to go through all of these other indexes as well. So we're dealing with something pretty important, which is this downtrend line, this key downtrend line, which it has failed at now and touched 4 times, starting with this first move and then failing. We have on the weekly chart a reverse divergence in place, but if you notice, so that's a negative signal because this is price is making a lower high and the MACD is making a higher high. So that's a negative. That's a divergent sign. The thing is that while that's been taking place, look at what's going on here. We've been pulling back, and now we've made 2 lower highs. Now, we still have one more day left in the week, so it's possible that that could change. But right now, this is a narrow range bar inside the prior week, which was a tiny little doji bar, one of the smallest ranges that we've had. So we've got 2 back-to-back small weeks, and the MACD is actually holding the signal line. So if we start out the new year taking out the high of these 2 bars, that could provide some strength and actually potentially cause a trend line break here. Something we want to be on the lookout for. When I look at the daily action, the MACD has crossed over to the downside. So this is not the type of pullback that I like, okay, in terms of like looking immediately for some kind of a move to the upside. I'm not really looking to play a move to the upside right now. I was thinking that we had a potential down move, but based on the way this played out, it's just kind of consolidated sideways instead of forming a really nice rally to the 18 and then turning down. Now that could still happen, but because of the way this is played out, I'd probably be looking at it on the hourly like a range here and looking for a breakdown pattern. Because this has been more of a sideways consolidation and not a rally, right? A 3 to 5 bar rally. I'm not really looking for a reversal like that. I'm looking more like, okay, this has been working sideways. That's what's showing here. And we'd be looking for some kind of a breakdown from a ledge formation. So that's how I see this. Now, I've mentioned this. I want to zero in on the daily for a second. I've mentioned how this red DI held above green and then turned up. But look at where it's taking place. It never really broke out above the green. So red is holding above green, but it's not breaking out above the prior green peaks. You see what I mean? So it's still kind of caught in a choppy environment. It's above 25, but the ADX is low. So I look at this as either green or red has been above 25 this whole time, but the ADX has been below 25 the whole time. So just defining that, always define the indicators when you can. This is saying that we have a high volatility situation, but a low trend strength. So whenever the ADX is below 25, we have low trend strength. Whenever we have at least one of the other red or green above 25 during any given time, we know we have kind of like a high volatility situation. So there's a lot of movement going on without a lot of direction. All right. So I want you to just keep that in mind, whereas this is strong trend strength. And yeah, there's volatility associated with it. You can see these swings that are taking place and even the swings in the blue line, the ADX line, but we have trend strength. This is the opposite. We have low trend strength, but we still have some volatility in movement. So what I would be saying is, look, we could probably draw a little trend line. Let me change this. We probably could draw in like a trend line like this here, and if that breaks to the downside, that'd probably be fairly meaningful just based on the fact that we're below this downtrend line. We've got reverse divergence, but what we don't know is this a pinch play to the upside, or is reverse divergence going to kick in and cause this to cross over to the downside? It really could go either way. I've been saying this now for about 3 or 4 weeks. The monthly chart is neutral. It's not really bearish, but it is below a declining 18-month, and that carries a lot of weight for me. So I'm sort of waiting for things to line up. We don't really have line up. We don't have anything lined up. What we do have is price is below a declining 18-month and price is below a declining 18-week. Now, it's just barely below the 18-week, but it is below. And wherever we're below a declining weekly and a declining monthly, you have to be more cautious and defensive. All right, let's take a look at the Qs. This is totally different. This is much more bearish. It's testing the low well below a declining 18-week, which is below a declining 40. We're below both of these moving averages. Now, the 18 isn't below the 40, but this is definitely weaker. We're going to come into some bigger support, but that's a lot lower. I mean, we could get a pretty good drop before hitting any next major support potentially. This whole pattern is much weaker. We never got ADX moving at all, just like in the spider. But this is a really strong decline, and this is actually potentially setting up this little mini rally. If we get a little mini rally towards the 18, I think this is something I'd be looking at to play off the hourly. Now, if it's going to happen on the hourly, it's going to be an ABC rally, and the 18 will cross above the 40, and we'll have that opposing trend trigger pattern. That's what we want to be on the lookout for on the short side if it plays out that way. It's possible that we don't do a whole lot and then we start the year with a flush to the downside, and then we could get some kind of a reversal if it plays out that way. I'll be updating that as we move. Now, the diamonds, as I've said, is much stronger, and we're coming into this support that I've been talking about around 320. There's not a lot of selling strength. We can see that here with the ADX is low. It had it at the beginning, but now it's been testing, and it's actually looking more like forming some kind of a little triangle pattern. And this is a nice little ABC pattern. MACD has worked its way back down off the overbought condition, and we have low ADX. So we should be on the lookout for this to be turning up. So if the S&P breaks out of this 2-bar high, right, off of its pullback as a pinch play to the upside, this will be doing the same thing, but it'll be doing it above support, not below resistance. This is above the zero line. This is a much more attractive pattern to be thinking about playing. I don't like the looks of this. This gave back a little too much, but it's still kind of in this consolidation pattern as opposed to the Qs, which looks a lot more negative. This is already hitting major support. So I'm not really looking for this to have a significant amount of downside, but there's nothing to do here until we can cross above this resistance level, which is really up at this 190 level on the daily chart. Now the dollar has come down a lot. Look at how much this has dropped. This is the US dollar index, made a pretty big move off the peak. Now we've had this correction. We've been moving down. Look at how strong the ADX is. Even though we're coming into big support, you see all this support we've got coming into, don't look for a big boomerang because this is strong ADX to the downside. This is massive overrun. We should spend some time consolidating down here, as this tries to turn around. It's going to take a little while. Remember, this is the uptrend pulling back to support. This is the opposing trend trigger that needs to develop on a weekly chart. It's going to take a little bit of time. Look at the oil chart. This came to pretty good support here and is trying to bounce off of it, but we don't have anything in place yet. We've got this trending to the downside, and this is still trending to the upside based on the moving averages and the fact that the price is above the 40. But we have overrun in MACD on the monthly. So the fact is that this is probably going to consolidate a little bit as we move into the new year. I don't think it's going to take off. And when you look at the individual stocks, that makes sense. It doesn't look like we're just going to take off. The oil isn't going to just emerge from here and explode to the upside. But I don't think there's a significant amount of downside either. Gold is a little bit different. Gold has made a really nice move into the end of the year. I think it's coming into resistance now, and it might start the year on a pullback. What's going to be really important is watching the pullback in gold. If gold makes an orderly pullback towards the 18-week and holds, then we start thinking we've got our undercut and rally pattern, and that's really what we're looking for. If that plays out that way, we should see some kind of a consolidation where this works its way back down to the zero line. So that's the combination I'd be looking for. We've undercut the low and gotten a good rally. Now we need to make a higher low on the weekly chart to set this up. TNX has made a pretty decent pullback on the daily chart, and now it's trying to emerge back to the upside. But I think there's a bigger probability that this spends more time just kind of consolidating here. There's pretty significant support underneath, and the momentum signs are very strong. So I'm not looking for this to fall apart. I just think we could spend more time consolidating. And actually, I just want to take a really quick look at the TLT. This is a tradable ETF. This actually has pulled back in a way where we've overrun the 18-week, but we have support underneath. So I'm leaning towards this being, again, more of a consolidation pattern rather than something that really is going to move strong to the upside. But nothing really outrageous taking place right now. We're going to have to see how this holds support at, say, 97, 98. Now, Bitcoin is still pretty ugly. We're below a declining 18-week line, which is below a declining 40. You see how strong the trend is? Let's look at this weekly chart. You see how this just can't seem to get back up through the 18-week? And I don't see any reason to want to do anything about this until that changes. Look at where support is lower. The bigger support is lower. We have not hit that yet. If we hit that and we show some volume explosion, then maybe you don't have to wait for the 40-week. But up until that point, we hit some kind of a climax formation. You don't want to do anything below the 18-week on the long side. Just continue to wait and look for this to cup around. I'm going to do something on, I've got a couple really important videos coming, one on this channel and another on the on my Stock Talk show that I think you definitely want to be tuning in here as we start into the new year. Some pretty important videos. I'm going to talk about some of the bigger cap stocks and how what we're looking for in terms of what it's going to take to turn something like that around. And the same thing will hold true for Bitcoin as well. Let's look lastly at the commodity index. Look at how this big move has gone through basically like almost a year-long consolidation, and now it's back to the 18-month line. The momentum signs are good. We have a little overrun in the MACD, so this probably isn't going to just take off to the upside. But this is an opposing trend pattern. We've got overrun here. We've got low ADX here. So this sets up for something where it takes a little bit of time, but then coming back up through this 300 level will probably be pretty important. Probably won't happen right away, but the commodities overall still look pretty good when you look at it in these terms. So that's the update for the last update for this year. Everyone have a happy new year, and we'll see you next time. Thanks.